And Fidelity and my team, I think, are pretty good at, very good at doing data visualizations. And our guru is Edward Tufte, who some of you might know. I would highly encourage you to read some of his books or do his one-day seminar, which is like going back to school, college for a day. Anyway, so these are the weights of the 11 GIC sectors going back about 65 years. The height is the weight, and the width of the line is the number of stocks, which matches the tabular data on the bottom. I could probably talk to this slide for an hour, but a couple of the trends that you see over the long sweep of history is the red line, which is the materials weight in the S&P 500, has gone from being the biggest sector 60 or more years ago to the smallest sector, where it's been for most of the last 20 years. The flip side of that is the finance, which is the black line. It's actually more gray on here, which was a rounding error in the first 15 years or so of the chart, and then went from 1.5% to 6% on a policy change to the biggest sector before the financial crisis. So those would be examples of secular decline and secular advance, whereas others are more mean reverting, like oil, which is the purple line. So you had an oil boom into the 80s, an oil bust, an oil boom into the 2000s, and one of the biggest sector busts in the history of this stuff, with oil going down and making a low pretty much coincident when the May 2020 contract traded at negative $40. So this is a combination of relative strength, policy decisions on behalf of the S&P committee, which tend to be pro-momentum. They tend to add things that are working. So if you look at the blue line, tech, it started the dot-com era at 35 stocks and went to 85 stocks as they added stocks going up. So again, there's not really a trade here, but I think it just helps you understand the investment landscape and where the big weights are over time.
Yeah, it's an observation, just seeing how many stocks industrial still has. Right, I know it started off at 120, but it still has 73 last I checked a few days ago, which I think is believed to tie with the financials after the rebalancing or so. So that speaks to like maybe, a RECOL weighted ETF or so, it still matters, industrials, right?
Yep. We like to look at the sectors equal weighted and cap weighted. To your point, communications is very top heavy. Tech is extremely top heavy now because MasterCard and Visa have left, and Microsoft and Apple are over half the weight in tech.